Hello everyone, this is Dr. Pooja Sharma, working as an Associate Professor in Department of MBA. Today I will discuss about the working capital concept of financial management. It is this topic of it is the subject of the second semester MBA, and this topic covers the fifth unit. What is working capital? Working capital typically means the firm's holding of current assets or the short-term assets, such as cash, receivables, inventory, and marketable securities. These are the instruments or the current assets which are used by the company for a year, and these are in circulation in a frequent manner. Actually, when the company will talk about the working capital is that capital which is used for the regular purpose, which is used for the daily purpose, which is used for the paying the regular expenses. And for this purpose, short-term funds are required to fulfill the regular expenses. Working capital is also known as the revolving capital or the circulating capital or the short-term capital. As I told you, this type of capital is used for the paying the regular expenses like paying the paying the creditors payment or paying the regular expenses to the labor, to the for the material, for the rent. These kind of expenses are done by the working capital. The concept of working capital means when I'll talk about the concepts of working capital or the methods of working capital. So the main two concepts are coming part of that. First is balance sheet concept. Second is operating cycle concept. Balance sheet concept is that concept in which we have to calculate the working capital by the balance sheet, which is prepared by the company annually. And on the basis of the balance sheet, we can calculate the working capital requirement for the future. And for this, we have to identify the work from the balance sheet. We have to identify the current assets and the current liabilities. And the difference between the current assets and the current liabilities is known as the net working capital. If I'll talk about the total current assets, that is known as the gross working capital. So in balance sheet method, what you have seen, we can calculate the working capital by the formula also. The first formula is the gross working capital. Gross working capital means gross working capital means total of all the current assets, and net working capital means total of current assets minus current liabilities. And operating cycle method, this is the second method which is used by the company for calculating the cycle or calculating the period in which the cash is converted again into the cash. So here we can see the cycle of the current assets. Operating cycle concept, here you can see the purchasing resources. We have to use the cash to buy the resources, and then that resource, raw material will be converted into the product by the production process. And then after completing the goods, after completion of the manufacturing of the goods, when the goods will come in the final appearance or the final product, then that product will go to the market for the distribution purpose, for the selling purpose. So these activities create funds and this cycle can convert the cash again into the cash. For purchasing the raw material, you need cash, and then you will use that material in final products and again sell that product and convert into the cash. So this is the operating cycle method. These are what you have seen. You have seen the two methods which are used for calculating the working capital requirement. Now, I'll talk about the types of the working capital. Types of the working capital, on the basis of basic concepts of the working capital, gross working capital and net working capital. As I told you, under the balance sheet method, the same concept will be applicable here also. The gross working capital formula, the total of all the current assets, and the net working capital formula means total of current assets minus current liabilities. Basis of time, permanent capital of the fixed capital, and temporary working capital and variable working capital. Temporary, permanent and fixed working capital again divided in two parts, regular and reserve working capital, and temporary and variable working capital is divided seasonal and special working capital. Here you can see the diagram of the working capital, permanent and variable working capital. Permanent working capital is that capital which is used by the company throughout the year at the same level. And the variable working capital fluctuates and increase and decrease with the season, with the special occasion, with the various reasons like a special occasion or seasons. You can just see the graph of that. It is continuously, it is not constant, it is ups and downs. You can see in the graph of the variable working capital, as I told you, as per the season, as per the special occasion like IPL, like the World Cup match, the requirement of the items which is related to the particular occasion will be changed. As per the Diwali and the Holi festivals, the working capital requirement will be changed as per the requirement, as per the product available for that event, for that occasion. So this till now what we have seen, the concept of the working capital, what is working capital and the types of the working capital, and the methods which are used to calculate the working capital. The two methods, first is balance sheet method and second is operating cycle method. Thank you so much. In next PPT, I'll just discuss about the factors affecting the working capital and what is the purpose of X, what the company should have the working capital, optimum level of the working capital. Either the company should have the excess or the lowest working capital or the balance of that. Thank you so much.